My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you a little money. My job is not just to entertain you, but to educate, teach you. Call me at 1-800-743-CNBC or tweet me, Jim Cramer. Own Nvidia. Don't trade it. That's been my mantra for ages now, and it's one of the best calls of my lifetime. After this magnificent run to just under 1,140, up another 7% today, well, maybe you got to start wondering, is it just luck? Did my charitable trust simply get caught up in some sort of crazy maelstrom? After a day when Nvidia really did define the trading, Dow declining 217 points, S&P inched up 0.02%, tech-laden NASDAQ gained 0.59%. It's worth looking at Nvidia and asking, is it too much? Or, as the bears would put it, enough already! Now, there are at least two schools of thought about Nvidia. There's one of the rigor, one of my favorite analysts in the stock, that's Ben Reitzes from Melius Research, who put out a piece this morning titled, Nvidia shares still pack a lot of value, end quote. And then there's the momentum analysis from Dan Fitzpatrick, a technician who nailed Nvidia better than most. Of course, given how long we've owned this one for the Charitable Trust, I have my own opinions. I love Nvidia. Why? Because it remains an intellectual powerhouse run by the smartest person I've ever met, Jensen Huang. More than a decade ago, he traced out what could happen with accelerated computing and artificial intelligence. He knew he'd develop super-fast chips that could do amazing things, including human-like inference and human-like learning. What I didn't realize when I first met Jensen was he was obsessed with the concept of speed, the speed you need to run cutting-edge video games since 1993 when he co-founded the company. At one point, Intel considered going against Nvidia, but they weren't interested in the graphic cards business, staying focused on old-fashioned central processing units. Ultimately, graphic cards ended up having much more computing horsepower, to the point where they now do a heck of a lot more than graphics, and Intel, on the other hand, no. Back in 2008, CNET wrote this terrific article entitled, Nvidia CEO Details His Beef with Intel. This is 2008. As Brooke Crothers wrote back then, I'm going to quote, Nvidia is the largest graphics chip company in the world with quarterly revenue in the $1 billion range, end quote. Now, to give you some perspective, Nvidia just reported a $26 billion quarter. The Intel rivalry I find instructive. As Crothers put it, quote, Intel is a chip manufacturer. Nvidia is not. It's a fabless company. Intel supplies the central processing unit, a general-purpose processor. Nvidia supplies the graphics processing unit, a special-purpose chip, end quote. I love this historical piece, so let me creep a little further. Huang is relentless in driving GPU performance and fearless when challenging Intel. This is admirable, if anything. Even the world's largest PC makers treat Intel with great deference publicly because the chip maker is so instrumental in supplying and defining the core electronics in their PCs, end quote. Then he goes on to say, but Huang will tear into Intel when he thinks it's warranted. And Intel may have reason to be worried about the content of Huang's candor. Despite Intel's colossal size and clout, Nvidia, not Intel, supplies the defining chips for the most savvy users, game enthusiasts, end quote. Intel's market capitalization now, $132 billion. Nvidia, $2.8 trillion. As it turns out, the computing speed that made Nvidia a powerhouse in gaming eventually did indeed make it the key to artificial intelligence. Of course, that didn't mean Nvidia could do no wrong. Not long after that 2008 interview, Nvidia actually flamed out in mobile. But it never lost its need for speed, and Intel never cared enough to truly compete on that one particular area. I point all this out because Jensen Huang's been thinking about how to create lightning-fast chips for decades. Chips so fast they can, when bundled together, mimic human thought, except smarter. And that's why Nvidia now pretty much owns AI, and AI owns the future. Now, that's not what Ben Reitzes from Melius is saying in the bullish piece he published today. He's talking about how Nvidia has a roadmap for dominance in its business, to the point where it became the premier growth company of our era. It will have a huge free cash flow, more than $240 billion over the next 3 years. He says it's attractive when you compare its price-to-earnings multiple to its growth rate. It's got amazing gross margins, in part because there's no real competition right now. So the stock will probably turn out to be cheap. Listen to this, quote, we argue it is worth paying for, end quote. Couldn't agree more. There's plenty else that's mentioned in this report, including analogies to Apple, some of the richly valued enterprise software plays. Hey, by the way, it's not just Righteous that I value so much on the fundamental side. Stacey Rasgon from Bernstein has been adamant that you need to own Nvidia, in part because it's relatively inexpensive for its growth trajectory. I use that word. Something he made clear when he was on Scott Wapner's Closing Bell show tonight. Inexpensive. He's nailed it, too. Now, to give you another bullish perspective, Dan Fitzpatrick, the founder of Stock Market Mentor, host of his own podcast, The Fitz Factor, regular off-the-charts contributor, has a lot to say about NVIDIA's fundamentals, but its chart, too. As he puts it, quote, if you think that AI is about to peak in development, then Nvidia is overvalued by a mile. But if you think that AI is still in its infancy, then investing in anything other than Nvidia is the key to underperformance. I love that. Currently, the street's average price target stands at 1,174, about 3% above where the stock's now trading. Fitz calls that analyst malpractice. Yes, malpractice. His 52-week target is 2,000 or 200 after the coming 10-for-1 split. As he puts it, I think there's a high probability that it will hit that print before the ball drops in Times Square. Don't you love this? He goes, this is the chart work. Yes, sometimes it is this easy. When the fundamentals are ridiculous, even numbers are the only reliable metric. Even numbers, like even odds kind of thing. Look at this, 1,000, 2,000. Pretty simple, right? How does he get there? Take a look at the weekly chart. Ever since the stock broke out above 500 in January, it's more than doubled. Amazing. Fitz thinks it's merely the first leg of the run. And based on the sheer power of this thing, he's betting it can double again by the end of the year. For him, this is a depiction of AI's future as much as Nvidia's future. And we're taking a look at the same chart, but with some different verbiage. Up 100% from one even number to the next. Lather, rinse, and repeat. Keep it simple, right? All right, his coda. It's one thing to try to catch up to Nvidia, but when you're trying to catch a leader that keeps growing exponentially, the task becomes really impossible. This is a chart of a nascent industry, he points out, not something that's a result of anything Nvidia specific, other than its ability to make the best chips. So what he really is saying is this is not Nvidia, it's AI, and Nvidia happens to embody and embolden it. How about both of those? Where do I come down? In the end, while Nvidia is a great company with a great stock, in the end, it's still a stock. That means there are other inputs besides the fundamentals for Nvidia to go higher. It needs fuel, but there's not enough money coming in to keep the rally going. You saw the other stocks go down today. Almost everything save Qualcomm, AMD, ARM Holdings, and Dell, all AI plays, seem to be for sale today, didn't they? Perhaps some money managers can raise enough money to keep buying Nvidia. Hard to imagine this $2.7 trillion company doubling in value without crushing the rest of the market, because the money's got to come from somewhere. I think that happens early in the day. I don't know. I saw the market up really big at 5 a.m. for what it's worth. Plus, valuation depends on inflation. Just because Nvidia can spew cash doesn't mean we're going to value that future cash as much as we do now. In other words, even Nvidia stock is not immune to the tug of the overall stock market, even it. And I should also add the bond market. And that's why, you know what, you've got to be, let's say, cognizant that the stock can come down a little and might be a better opportunity to buy. Bottom line, the buyers haven't repealed the laws of what governs the stock, even if that stock is Nvidia. I agree with Fitz. I agree with Ben. I agree with Stacy. That doesn't mean I agree with the most bullish projections that they're giving. For me, it means own Nvidia. Don't trade it. Let's go to Ross in California. Ross.
Booyah, Jimmy.
Booyah, Ross. What's up?
Lately, you've been talking about stocks like Getty Images as a play to license out their data for generative AI, and obviously Reddit just did that deal with, I believe it was Alphabet. Thinking in that vein, I'm wondering what you think of Yelp, since they've been compiling data for the last 20 years, people's reviews.
They have. But they don't have earnings momentum, and I don't want to key on that. By the way, just so you know, I tried to, I mentioned indeed that Getty Images, and it's not been a good run there either. I've got to be very careful about what I think can do better and not from AI, and I'm going to say that Yelp's in the not category. How about Leo in Texas? Leo.
Hey, Jim. Thanks for taking my call.
Quite welcome.
Long-time fan.
Thank you.
Just wanted your opinion on Astera Labs.
Astera Labs, I like Astera Labs. It's a little high. I think that a lot of the newer companies that have come public are still involved in a halo. This one started to go down today. Let's let it come in. There's a little too much halo to the new IPOs. They are all trading at very high levels right now. Let's go to Leon in Pennsylvania, please. Leon.
Good evening, Professor Cramer.
How are you?
Due to the lackluster performance in the stock over the past 3 months, should I be concerned about Blackstone?
The stock does not act well. That said, I know that there's value there, and I think you have to be willing to recognize that this stock could be down 10, but the value continues. Jonathan Gray's doing a great job. They own a huge number of companies. By the way, they own a data center business that is just second to none, frankly. So I say hold on to it, but be prepared. We're in a rocky moment for private equity right now. Okay, look. Even Nvidia's stock is not immune to the tug of the overall stock and bond markets. We can't exempt it, we can't asterisk it. It's just true. That's why I think maybe buying it a little bit lower it could be a better way to go. Now, on Mad Money tonight, the aforementioned Nvidia is at long last giving us that 10-for-1 stock split. So why have I been such a proponent of this move? I'm looking at some recent splits and sharing how it could impact your investing thesis, and it will. Then, from brown shoots to today's strong consumer confidence number, the economic indicators in this tape can give you whiplash. So how should you approach these mixed signals? I'm going off the charts in the S&P 500 to see where the major index could be headed. And Cloudflare reported a good quarter at the beginning of the month, but the street sure wasn't pleased with its guidance, sending shares lower. So are investors getting a buying opportunity ahead of what's going to be a very big analyst meeting? I'm getting the bottom of it with the CEO, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.